Shweta Mawal, and this is going to be the last session of third day of our 21st World Congress of Accountants, November 2022, Mumbai, India. We are here together since 3 days, and let's enjoy, let's learn something new from our eminent speakers. So let's go for the next session. This is going to be the last one. It's already 5:30 p.m. And this session is going to be about how Fintech is reshaping the financial services ecosystem. We are going to learn sneak peek into the evolution of Fintech and how much impact it has had on the financial sector since its inception and how it is reshaping the overall financial services ecosystem. So to start the session with, without wasting any time, let's call upon our eminent moderator, CA Ramakrishnan Subramanian, Chairman, Singapore Chapter of ICAI. Come on everyone, put your hands together for him. To give a short introduction, I would like to say about him, he is also known as Ramki. So Ramki Subramanian has 25 plus years of leadership roles at leading international and domestic banks in India, Asia, CEO, country manager, Asia regional head, retail bank, SME and boards of governance, currently advisor, operating partner, transformation expert partnering with PE, VC, FIS, Fintech. Oh my God, so many designations. It would be a pleasure to have you on stage, sir. One more time, come on, put your hands together for CA Ramakrishnan Subramanian. Next to join the panel, I would like to call on stage CA Jinand Shah, the Managing Director, Online PSB Loans. Come on, everyone. CA Jinand Shah, the Managing Director, Online PSB Loans, has 15 plus years of extensive experience across various segments, including financing, hand-holding, MSMEs, advisory, valuation, systems, and management audits. So we are going to have a big session with them. For the panel, I would like to call next Ms. Deena Jacob, co-founder and CFO, Open Financial Technologies Private Limited. Wow, I can see the energy in clapping. Deena Jacob is the co-founder and CFO of Open, the world's fastest growing digital banking enterprise. With over 18 plus years of experience in building and establishing finance terms from scratch for early stage startups. So we are going to, I'm sure that we are going to have an interesting session. Let's call upon our next panelist, and that is Mr. K.K. Pan, Vice President, Oracle, NetSuite Asia and Japan. About him, also, I would like to say a few words. Mr. K.K. Pan is currently the Vice President of Oracle NetSuite Asia and Japan, responsible for driving business and customer success through NetSuite's solutions across the Asia region, including China, Japan, Southeast Asia, and India. And now, ladies and gentlemen, last but not the least, in the panel, I would like to call on stage Mr. Nakul Jain, CEO, Paytm Payment Services Limited. Mr. Nakul Jain recently joined Paytm in March 2022 and is responsible for the online payments business. With over 21 plus years of experience across the length and breadth of retail banking distribution, product and segment management, liabilities, wealth management, international banking, assets, and now payments, he held various leadership roles across eminent banks. He is passionate about building a customer-obsessed franchises, relying large terms and building a high-performance culture, thus ensuring being the partner of first choice for clients and merchants. So everyone, please put your hands together for the full panel. Next, I would like to ask Mr. Ramakrishnan Subramanian to please discuss with the panel and open remarks.
Thank you. Good evening, everybody. Physically present here as well as participants attending virtually. My name is Ramki Subramanian, and it's my pleasure to be the moderator for the Fintech session this evening. As we all know, Fintech is altering the financial services ecosystem and changing the way customers engage with established business models in a variety of ways and use cases. And the industry is rapidly evolving. It's no surprise that finance sector is one of the areas that is utilizing the newest technical breakthroughs in this new age of digital transformation. Fintech, an acronym for financial technology, as we all know, has aided in the simplification of many financial services for businesses and consumers, be it in payments, lending, wealth management, digital banking, open banking. There are a whole bunch of use cases which Fintech has indeed exploited and aided. Fintech is a force for good, and I will, during the course of the discussion, explain and discuss more about it. It's an ocean, and the idea today is to get a glimpse of Fintech evolution trends, have a chat with the experts who are sitting here and discuss their life journeys. A lot of the information is available on the internet, but I think what is unique is each of our experiences of people sitting on the panel. Before we dive into the world of Fintech, the world is witnessing a few mega trends which I thought will help in terms of setting a context. Number one is the future of work. I think post the COVID pandemic, we all believe that the future of work increasingly is remote working models, hybrid working models. And it's no surprise that LinkedIn recently announced a 15% increase in listings for remote working compared to 1% or so growth rate pre-pandemic. So there is incredible amount of acceptance in the future of work model. The second thing is the youngsters who are involved with the fintech industry. They are looking for a purpose in each of the companies they work with. They care about the company's purpose. They care about its responsibility to planet Earth. And we've been discussing over the last few days this whole topic of ESG. COP27 just concluded in Egypt, and COP28 is scheduled in Dubai in November 2023. The third piece, megatrend, continues to be technology as a backbone that creates scalability, inclusiveness, and ability to serve millions of customers. That is what I'm personally most enthused about Fintech, is its scalability and ability to touch the lives of millions of consumers. And the fourth megatrend continues is around innovation and disruption and challenging the status quo. What used to be a traditional financial services sector largely led by brick and mortar banking, where even an advent of ATM was seen as a great new invention. I think today we are seeing payments, digital banking, a lot of new trends happening at a rapid pace. So I think innovation is the key. And as I mentioned earlier, a force for good, to my mind, is the number one agenda that Fintech will continue to play a role along with the larger players. Now, the idea today is not to get into details on Fintech funding, whether it is through private equity or venture capital. A lot of the information is available, but it's more around trying to capture the impact of financial Fintech in various ecosystems. So let me start by asking Nakul the first question, because there are multiple pillars in Fintech, and payments, as we all know, is one of the most important widespread pillar of Fintech. Nakul, if I can start off the session with you, how has the digital payments landscape evolved globally and more specifically in India over the last few years? I think your company has been playing a leading role, but if you could just give us a zoom out and a zoom in view to kick off the session this evening.
Thanks, Ramki, and good evening, everyone. No, I think it's an interesting question, Ramki, considering the fact that In last couple of years, we've seen a huge, as we say, revolution in the way the payment space has evolved. And that's evident from the fact that if you look at just the data for financial year 22, almost 75 billion transactions have happened. And UPI has played a very key role where almost 46 billion transactions have happened. And that clearly is showing that the huge revolution is underway. And India definitely is leading the chart today. And it's interesting to know that this is the same country which is now taken, much ahead of both China and United States as far as payment space is concerned.
Right.
Needless to say, a lot of Europe is way behind. And I think a couple of things have really played a key role in that. See, one clearly is during the pandemic, the need for consumer to, do contactless transactions. At the same time, merchants needed multiple modes of payments. And the speed at which the payment industry revolutionized both for consumer and merchants is a landmark in itself. And over the evening, I can talk more about it, what all has happened in that. The second clear factor is the regulator himself. So whether I talk about RBI, MPCI, everybody has played a key role in really pushing the space to the next level. So talk about interoperability of UPI. We talk about 24 hours, NEFT, RTGS today. So on a weekend today, you can transfer funds. I think clearly the regulator has played a key role. They've tasked, whether it is banks or it is payment companies, that this is what the consumer wants, and you'd want the solution to happen. And I think that's the key role, which is. And the third great thing is the way the fintech space has evolved over here. And I think that has really helped to bridge some of the gaps which are not being filled by, say, a bank today or a payment company. So I think the fintechs have played a key role where they, till the last mile, you will see that the entire aggregation has happened till the last mile. So I think these 2 or 3 factors really played a key role. We're very bullish, and I can give confidence to everybody that the way work is happening in the payment space, there is no way anybody else can catch up with us. I'm very fairly confident of that, but I can tell you that equal interest is on from the regulator and from the consumer too, and I think that's playing a very large role in this entire space.
Thank you, Nakul. I think it's a very interesting topic that can be discussed at length. But a lot of you who are from the international audience, you may be interested in reading a little bit more about the UPI backbone established in India and the millions and billions of transactions, particularly low-value transaction at almost free of cost, frictionless model that has been enabled, especially to people even without bank accounts. So that's been quite a innovation and infrastructure creation led by the government. Let me ask founder of PSB Online, Jinand Shah. Jinand, you're an expert in lending and digital backbone as far as small ticket loans are concerned or medium ticket loans are concerned, both for retail and SME. Could you talk a little bit about firstly, the evolution of digital lending in India, and also there have been a bunch of regulations that have just released by the Reserve Bank of India. So it would be helpful if you could just paint a picture for us, Jinand.
Yeah, first of all, Nakul is in an industry, payments industry, that has transformed substantially. Lending is an industry that is transforming. It is into that phase where payments was initially there, right? And the first transformation for lending was initially seen in 2016-17, where a lot of marketplaces started coming in on the individual loans. So that is a personal loan or a car loan kind of marketplaces coming in. So that was the first time banks understood that other than banks, there can be players who can bring in customers and do the journeys for the customer. But the most complex part which he asked is how to do it for a business, right? A business financing is not as simple as an individual financing. Individual financing, you have a salary, you go to a bank, you show the salary slip, there are credits happening every month in your account and you get the loan because they know you will be able to pay it. But what about a business? What about a business? What is the revenue? Where are the revenues coming from? Who are the customers? How good are the customers? What is the credit history? Does this person ever have a credit history? There are many more complex questions than in individual financing. So the evolution started from an individual financing. It has moved to a business financing, which was one of the most complex one of the most complex, and still it is quite complex. It's not like it's resolved. It's not like payment that is transformed to a next level already and moving ahead in the curve. Lending is steadily moving forward, and business financing is one of the most complex things which every player is trying to figure out. The benefit we had and why I am there possibly in this panel is because I had the leverage to work with the largest of the banking sector players in the industry who are our shareholders, and came to know what were the ground realities, what were the problems, and how to solve that problems. So we have not been able to solve it 100% because it's a complex problem, but at least reaching 60% solution is good enough for a lending organization or lending institutions to move forward with. Now coming to the second question, that was what are the RBI regulations that have come in? So this is something that has been recently talked about in the market, the latest guidelines on lending that have come up, and whether those guidelines are good or those guidelines are bad. Now imagine there are 200 apps that were banned overnight, right? And these apps were charging enormous, like 40%, 60% rate of interest, right? And the customer was repaying it by taking another loan from a sister app. Now, if this kind of apps were present and the regulator was going to close its eyes and not do anything, then we are fools. Regulator definitely had to do something, right? And the regulator is smart regulator, as Nakul told that the regulator has supported payments industry. And the regulator is going to support the way lending industry is transforming. So they cannot allow such apps who are doing mis-selling or who are actually going to affect the Indian community in a different way. So that had to be stopped. Now to stop that, regulator had to come up with guidelines. So these guidelines actually, so in Gujarati, so I'm a Gujarati. So in Gujarati we always say ke suka sathe lilu bade, right? So it means that if you are burning the grass which is to be burned, there will be other grass which is a good grass that also will get burned along with it, right? So when a regulator comes out with guidelines, it did impact the ones that were bad. It stopped them. But it also impacted ones that were doing good, who were regulated themselves and who were innovating to next level. So it impacted both. Now the regulator is figuring out how to ensure that those people who are doing good can continue doing good by ensuring that the next level of guidelines and regulations come in, right? So it is settling down. The regulations are settling down. What came in had to come in. It was not like we were not expecting it to come in. It had to come in. But those who were doing good, those who were not having malified intentions of the apps that were there, they all are getting green signals to do it again. So that is not a challenge that we are facing in lending industry. It is not something that we all are afraid of. It is a welcome move from the regulator that this has been stopped, something that had to be stopped. But the innovations should not be stopped. So that is where the regulator is currently working upon. So primarily lending is in a phase of growth. It is in a phase of transformation. A lot of transformation has happened, but lending is like a more complex problem to solve. It is a problem where you have given money, but you have to take back that money also, right? So that is the complexity in which lending regulations will be coming more and more in the country, and being in that position, working with the banks day in day out, right? We know that every bank, be it SBI, that is the top public sector bank, HDFC, that is a top private sector bank, every bank is having a digital initiative to automate their entire systems, right? So definitely lending is on the roll, and by I think 2025, the lending sector in India would have reached a stage where the payment sector in India is already reached. So it is not far off. It is just 2 years down the line that you will be seeing the entire lending industry automated also.
Thank you, Jinand. I think we started off this discussion with a big picture on the payments landscape. We got a good overview on digital lending, which is again straddles, salaried consumers, SMEs, multiple geographies, partnership models, straight through microfinance. There are different types of digital lending models. Let me shift tracks and request Deena Jacob, who's the co-founder of Open Technologies. Deena, we are hearing so many terms in the fintech industry, right? There is payments, there's wealth management, RegTech, InsurTech, Open Bank, Neobank. Of course, crypto, blockchain, we'll come to it subsequently. But could you please start with defining what is neo-banking all about?
Thank you so much, Ramki, and good evening to everyone. It was a pleasure hearing from Nakul about the payments and Jinand about loans, and these are all a part of, if you look at it, these are all part of transactions, right? And we as people who have transacted, both as a consumer or from businesses that we are running or from the businesses with whom we are helping out with as a child accountants, as accountants we are working with, we know that the core of everything we do is a transaction, which has got two aspects to it. One is the money flow, and the other part is the real transaction document or something which tells you between whom it is happening and what it is happening for. So it's as simple as that if you look at it, but at the same time, to seal this, it's extremely complex, which is where the banking system has to come into picture, payment system have to come into picture, and then we have the other aspects, the tools and everything else which aids in, be it legal part of it, be it exchange of whether it's invoice or not. So this is a full-fledged ecosystem which concludes a transaction. Now coming to neobanking. So now we hear about quite a lot of terms on what is a neobanking, the fintechs. Ramki put it so nicely in terms of what all of the different terms which are coming out right now. The fact is that traditionally, banking is where people's interest was protected when money and the transactions are taken care, hence it was highly regulated. And this was traditionally going in a very, very offline focused mode. And today, we are in an era in terms of digitization that most of it is moving into digital. Other banks, the banks, while the leap of, in the early 2000s, we have seen banks and banking systems completely shifting into digital. But at the same time, the transactions still remain to a good extent offline. In the last decade or even half a decade, if you see, it has been an era of every pocket of banking, right, from payment flow to, say, be it lending, everything has come to digital. And in the neobank, when you talk about it, this is about complete digitization, or rather the digital banking without even you not having any kind of touch point with a bank from a physical perspective, not walking into a branch. How can you do it without even having any kind of operations from an offline perspective? Contactless banking, as well as other services which come together of concluding transaction. If you can put both of these sides together, that's where neobanking takes its root from. And which is where different elements of all your transaction and the digitization which happens, whether it's on the insurance side, whether it's on the wealth side, which is where the technology comes into picture, and new technologies and the technology providers are finding ways in which transactions can be contactless and made it seamless for the customer. So this, in my words, would be something which constitutes a neobanking perspective. It need not necessarily be a completely regulated part. This is a part of, or rather, this is an ecosystem where there would be a regulated entity, and there could be fintechs who are also, or rather, the technology front end, who also helps, plus even the distribution side, who also helps in bringing all of this together, concluding a transaction, whether it's consumer or whether it's business.
Thank you, Deena. That is fascinating, right? I mean, banking without physical branches, literally no barriers. It is a layer, and it can have multiple niche segments and offer a full range of products and segments. So very fascinating. And neobanks are often called challenger banks. So they actually challenge the existing incumbents by just offering various products and services in a frictionless way. KK, can I come to you now? Technological progress and innovations are the linchpin of fintech development and will continue to drive disruptive business models in financial services. You've had wide experience in Hong Kong, Singapore, various other international markets. What, in your view, will be the key fintech development and changing the competitive landscape of finance? So it could be artificial intelligence, embedded finance, lots of stuff happening on system development. Could you throw light on this topic, please?
Yeah, thanks, Ramki. So I'm the tech in the fin, right? So less of the financial, but more of the technologies. So as Ramki has said, technology actually empowered all this happening, from payments, e-lending, neobanks, right? This couldn't happen as near as maybe 5-10 years ago, right? So what does technology brings to the table today? Like Ramki said, artificial intelligence, machine learning, for example. So I'm from Oracle, so we powered a lot of this kind of fintechs initiative. They are both our customers, they're also our partners, because times has changed. AI in customer services, AI in fraud detection, AI in risk management, that actually give a lot of speed and agility back to the consumer, right? If I may use my friend here, Online PSB. So for those who know, if you visit their websites, right, they can do loan in 59 minutes. 59 minutes. Can you imagine that happening previously? Probably not. So the challenge will be very soon for Jinand to do it in 59 seconds. And that is possible. That is possible when technology like AI and machine learning, integrated systems that collect disparate data and make smart decision. It can be done, right? And not only that, the landscape has also changed in terms of embedded finance. Embedded finance. So I hear a lot of bankers, ex-bankers, yes, right? But I think for all of you who know, actually a lot of fintechs are not powered by banks anymore. They're powered by a use case, right? You probably know, right? The car or taxi hailing apps are now going to fintech. Telco, I'm sure Joe is a fintech.
Yes.
Yeah. Non-traditional go-to-market people, but fintech are now more nimble to solve a lot of more of new challenges. Jokes aside, I mean, a lot of times banks only want to lend money to people with money to a certain extent. Yep. If you have no collaterals to hedge against, it's probably very difficult to get a loan. You probably have to go to PSB loan. But it has changed. PSB loan, they have a lot of data. I'm sure they have a lot of technology to assess, the credit bureau assessment of yourself, the big data, the social media behavior, they make it possible. And better finance is also very big. For example, one of the booth here, HSBC, just for information, we have banking as a services with HSBC. You can bank, being an Oracle customer, directly opening account, credit card with HSBC. They can do banking reconciliation for you. They can do APAR, the services for you. And more importantly, they also can do supply chain invoicing finance to give you short-term loan that bridge you over a certain period of time. So technology is moving, right? And of course, last but not least, you cannot oversight on blockchain. I think that would be a different question. Blockchain is not crypto. We'll wait for that, okay?
Yeah. Thank you, KK. I think the moot point here is that the fintechs, by nature, and most of them are not banks or finance companies. That's a big moot point. They are experts. They take certain parts of the value chain, innovate or disrupt. And the traditional incumbents who in the past were quite closed to external solutions, I guess in the current era, it's all about collaborative competition, plug and play, open architecture, as opposed to saying, we have a problem, we will solve for it, we will build it. You have a partner who could be 100th or 1000th your size, but he is better at doing that small little value chain activity far better than what you are able to do. And how do you create an ecosystem to take the power of that and integrate it with the checks and balances? I guess that's the whole fintech ecosystem, for all of us that we should bear in mind. Moving to Nakul, again on payments. I was just looking at payments as an industry, whether it's wallets, whether it is QR code. Now, if you think about payments use cases, there are a whole bunch of them. how can payment partners be actual business partners and not just solution providers? Nakul, maybe if you could please elaborate on that.
Yeah, Ramki, I think, see, I'll start with a small anecdote of what happens today, and it's very interesting that, how consumer is today, so you might just walk into a offline store today, and in a erstwhile model, one would believe that the only way this person will purchase is through an offline payment mechanism. So if a company was to think only in that manner, then they would only wait for the consumer to buy through a POS machine. But what's happening today is that, you may walk into the store, breeze around, come back home, go online and see there's a better deal online, and you may want to purchase the stuff that you've seen in the offline store online because you got a better deal there. Similarly, a guy could be breezing online and could decide that, yeah, I like this stuff, let me go to an offline store just around my neighborhood because there are better ways I can pay off. I can pay through an EMI on a card, or I can pay through a QR code, and they could purchase. So the boundaries of offline and online are completely going off. So I think that is one thing that is clearly making the whole space very, very interesting. I think that's the key takeaway. First key takeaway is that I think, one, the payment companies have to start partnering with their merchants in a way that these boundaries get seamless. So, when I look at Instagram today, I look at a lot of guys who are coming on Instagram with a new ice cream or a new macaron, but I cannot dispute the fact that they will put up a shop around the neighborhood, and for which they will need some offline solutions. And similarly, a shop may come off in your neighborhood today, and you may say that they will not go online, but the minute they hit a certain turnover, they want to start looking at online solutions. So a payment company needs to be present on both online and offline side, and that's where the solution starts, right from a simple paper QR, which you can just scan and make the payment, and going up to a smart POS machine, and going up till a online payment solution. Now, when you come to online payment solution, are you offering all payment instruments, whether it is cards, wallets, UPI? So obviously, how seamless is the integration? And of course, a super app like Paytm, and I'm just giving you an example, the biggest proposition also happens to be that you can use my own app. So that the third wing is the app, where you can actually go and, a lot of D2C brands can use that for specifically advertising themselves, and that really gets you a lot of consumers. So the fact that I'm saying is that everything is getting blurry over here. Offline, online, e-commerce. How can you partner to grow your merchants' clients? How can you make consumer payments easy? How can you give more modes of payments to the merchants? And at the end of the day, how can you make the full flow of the money so seamless that the whole economy becomes seamless? So I think that's where I would say the payment industry is going. And the more you can innovate there, the faster it will be, and it will be much more well accepted by both merchants and consumers. Ramki, I don't know whether I could answer your question, but I guess that. And KK, just to make it a point, a lot of people who are on the product and technology side are responsible for what we are able to do today. So thanks to people like you who are able to make it happen.
Yeah. I think it's fascinating, right? I mean, today all of us are moving towards a cashless society. And it's not just at the middle and top end of the income pyramid. You're finding people carry less and less cash, isn't it? You, all of us in this hall, or people watching the program, how many of us today carry a wallet full of cash? And as we all know, cash costs approximately 1.5 to 2% of GDP. So actually enabling payments, and particularly not just high value, but at the lowest end through UPI, which is the exchange for multiple payment issuers, I think that makes it ubiquitous. That makes it reach the vegetable vendor, to the small business, to the guy at the parlor. And that, I think, is a sign of a maturing society. So with that, what I would like to also switch tracks is on the lending side. Particularly here, we've seen, Jinand, various government schemes as well as various APIs and tools. In the good old days when I started banking, a lot of it was document-based evidence, rule-based, debt burden calculations, not much of proxies, not much of alternate data. It was all very few rules and parameters around income profile, occupation, quality of life. But I think today we have ability to look at 10,000 data points before we take a credit decision. So perhaps if you can just tell us A, type of schemes, B, the OCAN system, the GST system, how do they all come together to enable faster, efficient lending decisions?
Okay, so I'll come to the GST and OCAN APIs, but before that, because we have two panelists over here who process a lot of transactions, right? So we'll take examples of them, and then we'll go to OCAN part. So say Paytm is there, right? And say there's a lending player on the other side who is integrated with all the banks, right? So all the banks today are interested in data that Paytm is processing, right? So Paytm might have its own NBFC, its own arm, but every transaction that is getting processed by Paytm, the insights that are generated by Paytm, the scoring that Paytm is doing, the data history that Paytm is having, that is something that will be a valuable information on the other side for the banks to lend, right? Simplest example. So we'll discuss offline with him when those APIs will come up, okay? Similarly with Open, okay? So Open has, say, 3 million MSMEs, right? All the MSMEs issue invoices using their system. They have the entire supply chain managed using their system. They have all the banking done using their system. What else does the lender on the other side require? So when Open has an API structure which gives this data to banks on the other side, bank already has an infrastructure to consume this data, give an offer on the other side, and that person sitting on Open infrastructure gets a financing in their office without going to bank and a branch. That is exactly how lending is going to transform, and that is what we call as a cash flow-based financing. Now, believe me, this is going to happen. Whether Open and OPL together do it, Open does it on its own, Open does it with anyone else. Tomorrow, banks are going to be there on this platform, on that platform, every platform, and that is how lending is transforming. And this is what we tell that it is a cash flow-based financing or a database-based financing. So now coming to second part is a GST transformation, right? GST brought in a lot of data of an MSME. There are more than 1 crore MSME that are filing GST returns, right? For those who are not from India, it's 10 million MSME, 10 million plus MSMEs that are registered with GST. They are filing monthly or quarterly returns. These returns actually have the sales data, they have the purchases data, month-on-month data of how much turnover that is happening, how much purchases that are happening, from whom you are purchasing and whom you are selling. If you have all this data, right, you can actually do a profiling of that person. Now that is what Open is also doing with multiple extra data points. So that is what GST brought in. Lending requires data on which a decision can be taken. And why it was happening physically? Because these data sources were not available. Before 2017, GST was not there, right? Account aggregator came up recently, right? It was not there earlier. So this all data points are going digital. The more digital data points are there, the faster lending decision can happen. But you will tell me that, okay, the lending is already happening digitally. Like NBFCs are already giving loans. Now this is basis some limited data points that are happening. Once the additional data points and APIs are opening up, this all APIs will help the bankers to make better decision making. So with a limited data points, the banker has to accept that my NPA might be in a range of 5% to 10%. My rate of interest instead of 10%, I'll charge 15%, right? So that my risk is covered. But the customer on the other side is really good. He will never go for a 15% loan. He would like to have an 8% rate of interest. So that is where the additional APIs, additional data points will help the bank to give a better decision making. So that is called as an API-based or a data-based decision making in lending, which is coming up. The third point which you referred was an OCAN framework. Now, how lending is transforming, this I don't know how many of you would be aware of it. It's very technical. It's called as Open Credit Enablement Network, right? Now, every lender on the other side, if I have to integrate, so today, say my system is integrated with every lender on the other side, which is there. For integrating that, it took me 2 years with each lender because their systems, their internal requirements, everything I have to comply with. Every bank taking 1 year, 2 year is crazy. So that entire thing, right, is getting transformed into same state of APIs which every bank will be using to integrate, right? So what is happening is while we are creating infrastructure for the banks, we are creating it in a manner that tomorrow I have to integrate with them or third party or fourth party. It will be the same API structure. And they will understand that this is the API structure in which lending gets integrated and the integration will happen faster. So that is the OCEN framework which is coming up in India. And that framework actually will be applicable for every country because lenders should not have different API integration system. There has to be a common protocol of API integration. Otherwise, lending cannot transform, right? So that is about the OCEN framework that is there. Now, there are multiple such things that are happening in lending infrastructure, but this is the key thing that I think the audience should be able to learn on the lending ecosystem transformation. Yeah?
Thank you, Jinand. Deena, if we were to think about, the fact that we are at the World Congress of Accountants, we are all accountants in some form or the other. What does fintech mean for accountants, and how does the client touch points and roles and just the roles of, the various things that an accountant can do and interact with fintechs? Could you just give us your thoughts on that?
Sure, Ramki. So in fact, interesting point Jinand has raised also. So if you look at the fintech and the way in which the client landscape, even for that matter, the practice landscape is changing, think of it from a business client's perspective. So we as accountants, when we go and have this touch point with the customers, clients, there is this part of organizing and getting a structured data which has to go into 3 areas. One is for their own decision making for cash flows and what needs to be done from a business perspective. Second is to the government or to any of the regulated and the regulatory bodies to see how ethically and how compliant what results you're looking at looks from on par with others who are making the transactions. And third, from a cash flow management, or rather when we talk about whether you need a loan or if you have a surplus cash, what you need to do with it. So these are the 3 areas where, whether it is, after the transaction, wherein the payment, all of right from the payment part to the recording, reporting, all of that translates into. Now, traditionally, again, this has been it's an extreme big combination of manual effort, reconciliations, and then coming into a decision making, which most of the time would have the perils of manual intervention, which could be, errors, omissions, talk about it. And then the hard work of structuring the data, which, if you look at it from a lending perspective also, in India, the gap in MSMEs lending requirement which is being catered is a whooping anywhere between a $400 billion to a $600 billion depending on the estimates and the reports that you have, you can lay your hands on. Where is this stemming from? This is stemming from the fact that it's difficult for, or rather in terms of the businesses, it's really difficult for them to understand how to record this data, which happens right from cash economy to different modes of payment. Right now, they have through UPI, it could be coming into the savings bank account. It could be like, cash which they are collecting sometimes. Payment gateways which get settled in lump sum, net of MDR, net of TDS, you talk about it into a system. Money which flows into their bank account, sometimes, through a check, whatever, but it'll be net of some taxes. They can't make sense of which transaction it belongs to. So this is where this data cannot be read by any other consuming institution which has to give them, whether it is in the form of lending, whether it's in the form of a financial statement they can present. So this is where today fintechs, if you look at it right from payments, which is a structured way in which you can actually look at whichever transaction, monetary transaction is going on, it is monitored and recorded in such a manner that it has got a trail to it. You can identify what happened where, and wherever you have, it has to flow into, you have the capability of putting it there. when it comes to data in terms of, invoicing, e-invoicing, GST, you talk about all the infrastructure which from a regulators and the government's perspective which has come also. Digitization, because of this digitization push, you are in a position to evaluate and understand between which all parties the data is, or rather the transaction is happening, and what's the quantum and the quality, making it much more easier to commit this data into one system. But the changes that is happening in the landscape also is that this requires the service providers, or even in terms of, when we are giving advisory and qualitative approach, even from a statutory perspective, how do you change the way in which you approach to consume this data, to give them the right kind of advice, and even, process this in the new age technology. So this is where the technology, or rather adoption, embracing technology becomes extremely critical. And no longer, gone are the days where we can just look at tons and tons of paperwork and then take a decision. And gone are the days wherein we could take 2 months to come to a decision. It has to be quick, immediate, now, here and now. So these are the areas where fintechs, or rather in terms of the new age technology adoptions, tools and different things which we can put together makes a lot of difference in one, the way in which the data is, or rather the clients are being serviced, as well as from the way in which we are in a position to enhance the client's consumption, or rather client's ability to get the benefit from what the ecosystem and the digitization is happening. So when I talk about our own, the way in which we built, in our company also, we built something, though we started with current account and banking as the heart of the product. The entire product is all about a business operating system for MSMEs. The whole idea is how to democratize their access to technology, wherein we have layered right from banking, payments, compliance, accounting, everything on the same platform. And the thought process behind it is, this is a stack which enables what is the transaction that is happening. The next level is predict whether you will have a cash, what would be the position that you will enter into in terms of cash flow. And that going into, there can only be two situations. Either you have a surplus at any point in time, or you have a deficit, which is catered either by a wealth management or by a lending. Which is to the point where Jinand was also mentioning, without having this rich data, the ability to look at it, you will never be in a position to manage your cash. You will never be in a position to grow your business. And that is the power of technology. And this is not done by one person. This is not done by bank alone. What we also are creating is an ecosystem, putting it together by technology, an ecosystem which is digital assumed. So there are multiple stakeholders, multiple parties, right from the regulator to the regulated entities and incumbents, which are banks, to the lenders. There are multiple people who are consuming, looking at data, and providing a lot of quality services. And ultimately, probably from a practice perspective, think of it as, if you were to look at or give a quality advice to the client, how do you put all of this together and enable them to be the top layer? So that's how the whole landscape is changing. Technology, identification of the right tools they should be using, so that things are seamlessly committed onto the mainstream platform, so that the financial inclusion, or they're a part of the mainstream platform. This is the only way in which the whole gap can be taken off, which again boils down. Yeah.
Thank you, Deena. We are actually, going to shift to some of the challenges of fintech, and I'm conscious of time, and I also would like to invite a little later questions from the audience. But before we do that, I just want to ask the panelists, we keep hearing about blockchain. Is it good or bad? It's a debatable point, right? You heard the recent crypto crash, right? I mean, is it a speculative asset? Is it a good asset? And, and then of course you hear of so many things: central bank digital currency, CBDCs, purpose-based money. So there's lots of stuff happening. But let's start with a little bit of a controversial topic around, is blockchain good or is it not so good?
Well, maybe I'll start, right? I like blockchain because I think this is a technology with the potential of re-landscaping, right? A lot of services, a lot of financial services, to be exact. So I think there's a lot of misconception, right? That crypto blockchain. So blockchain, for those who may not know exactly, if I may, blockchain is a technology. It basically, in a nutshell, is a DLT, distributed ledger technology, in which data are no more centralized. For those who follow this technology, right, when Web 1.0, so-called Web 1.0, data was really centralized. Web 2.0, which we are now currently at, are by a few cartels, right? You know who they are, right? Your data are with some social media, right? A lot of your information are being sold, whether you agree or disagree, right? And Web 3.0, so to say, blockchain, is actually going to bring it back to decentralization, in which you own your data, you own your control of your content, and something like that, a little bit like that. So is blockchain good? Yeah, I think if it evolves in the right direction, it is. Blockchain, at the end of the day, if a blockchain provider is not providing a use case, a value, for example, payment, you may have crypto as a payment. That is okay. That is okay if that is a good services, which it is. It is a very good use case for Web3 in terms of decentralization, cross-border currency transfer, cross-border trade, right? But there are a lot of a lot of crypto that give blockchain a bad name because they don't really provide a service. They just provide a crypto speculation platform for you. So yeah, I think blockchain is great, but I think that crypto speculation at the retail level is something that I think we really need to be careful.
Thank you, KK. Let me go to each of the panelists, 60 seconds on the same topic. Blockchain, crypto, and any other perils of fintech, for example, data privacy or any other compromises. But please do comment on blockchain, crypto to begin with, 60 seconds each.
So I tend to agree with KK that, yeah, I think if the purpose is well understood, then I think it's a great technology to have. The other perils that I can clearly see in the payment space clearly is data and how well you're taking care of that data. I think we are very very conscious of that. And the other thing that I must call out, and it's a age-old banker thing, is how your ops risk model works. Because what is happening is, and I just want to call out to a lot of people who have their startups and who have their fintechs, that you get swayed away in the growth. But if you don't put a strong ops risk model around it, which exactly tells you how to control and where you have the right checks and balances, then it can just take the entire fintech or the entire organization into a different level. So my strong suggestion is that put a very, very strong ops risk governance model around it. And then I think there's nothing that you should be worried about, I guess.
Thank you, Nakul. Deena, you want to take a 60-second shot at crypto, blockchain, or any of the perils of fintech?
So crypto blockchain, I mean, I'm a big believer in blockchain as a technology driving a lot of things that the future has to see, because today everything centers around whether data can be trusted or is there a potential of being tampered, which is where a lot of checks and balances and the regulations that you say, the way in which we do comes into picture. I believe blockchain will be a great solver for that, especially that now global village. We are in a place wherein the geography doesn't matter, boundaries are not there, and even between different currencies. So that's where blockchain, I would say, that would lead the way. In terms of fintech, perils of the fintech, the second aspect which I think is, yes, the data security and the purpose behind. While fintech is an enabler in handling penetration and in terms of going much wider for each of the services which goes to multiple people, it can also have, if it is not used in the right way, it could potentially, this is where the entire thing of how do you handle the fraud, how do you handle data, all of these are the areas which has to be the responsibility of the fintechs also, as much as of the regulator, to take care, have this right check and balance, as Nakul also mentioned. And that's my 2 cents about these 2 topics.
Thank you, Deena. And Jinand, your 60 seconds on blockchain, crypto, and perils.
Only 2 statements. Crypto is not going to come in lending. not quite soon that I can see for, neither for giving loans nor for taking it back. Second is blockchain use case. Definitely banks are looking into it. But the use cases are still not the use cases that would have been envisaged by now. And the privacy, yeah, PDPU is coming up. So we all are looking forward for the privacy bill that will be there in India. That's all from me.
Thank you, dear panelists. It was a fascinating session. This is a topic which is probably a 3-year university program, and we are trying to condense it in 60 minutes, and it's hopefully a session, but it's not closed yet. If you'll allow me a minute, I do want to say that on balance, fintech is a force for good. All right? You see small, early stage fintechs, you see fintechs journey which are, mid-size, and then in the growth stage. So there are various topics around funding of fintechs that we haven't covered in detail today, but I'm sure this is food for thought for all of us to see how that system is evolving and the success rates and so on. I think in terms of the force for good, the way I see it as being a banker for a long time is democratization of small credit, democratization of payments. Okay, so some of the F's, fintech itself is an F, but I like to think about it as frictionless, straight through processing, flexible. It's not like you go to a bank, minimum ticket size for a loan is X amount. They don't entertain $10 or $100. But with this, you're able to think of hundreds of use cases. So flexible, frictionless, flexible. Third, fractionalized. There is no issue on ticket size. It's technology as a backbone. Fourth one, I would say, if I can use the word, is free. Thanks to the governments and regulators, the UPI infrastructure, the Pay Now infrastructure, the prompt pay infrastructure in different countries have been piloted by the governments, and they have not started charging a fee. And so for the consumer, the person who is at the lower end of the income pyramid, I think it's a great way to embrace, fintech and some of these products. So I think, on summary, I would just say that fintech is a power for good, is a force for good. I hope this last 60 minutes was a good primer to some of the various categories of fintech, some use cases, and some interesting perspectives from the panelists. So thank you for participating, and you're free to interact with the panelists and all of us post the session. Thank you once again.
Okay, I'll request everyone please settle down just for 2 minutes. Thank you everyone for being on the stage and making us aware about how fintech is reshaping the financial services ecosystem. This session was really point-to-point explained by all our panel members. Thank you so much for that. And now to give away the mementos, I would like to call upon first CA Murtaza Kachwala, Chairman WIRC of ICAI, to give the memento to CA Ramakrishnan Subramanian, Chairman Singapore Chapter of ICAI, in other words, Ramki Sir. Everyone, come on, let's clap for them. Next on the stage, I would like to call upon CA Anurag Chaturvedi, Chairman Dubai UAE Chapter of ICAI, to give away the memento to CA Jinand Shah, Managing Director Online PSB Loans. Audience, come on, let's cheer up. Last few minutes of this session, I'm sure you all will be meeting us tomorrow again. Next, I would like to call on stage CA Durgesh Kabra, Central Council Member ICAI, to give away the memento to Mr. Deena Jacob, Co-founder and CFO, Open Financial Technologies. Miss Deena Jacob. give away the next memento, on stage I would like to invite CA Dayanivas Sharma, Central Council Member ICAI, to give the memento to Mr. KK Pan, Vice President, Oracle NetSuite, Asia and Japan. Again, I would like to call on stage CA Durgesh Kabra, Central Council Member, ICAI, to give away the last memento to Mr. Nakul Jain, CEO, Paytm Payment Services Limited. Thank you, Ramki sir, and the whole panel. It was a wonderful session, the last session of today, the third day of 21st World Congress of Accountants. This is November 2022. Tomorrow we are meeting again, and let's see tomorrow what we are going to learn from our eminent speakers. Thank you everyone for joining. See you all tomorrow. Have a very good day. Enjoy the evening. Thank you so much.